The Mike and Mario Show. Excited to be back and connect with you guys, and share our 2 cents on this past week's events, as well as look ahead as to what's coming. And like none other, we have Mr. Manico64. How you doing, my friend?
I'm doing well, Mike, and you?
I'm doing good, man. Doing good. Excited to connect.
Yeah.
A day earlier, but due to just a challenging schedule, we needed to get our discussion in because we do a good job of giving people the real talk and truth. So looking forward to doing that, man. But as you mentioned, having a little bit of a nasal situation, so I hope you're feeling better. But give me your assessment on the week, man. Where are we at now, and what was your primary focal point this past week, if you don't mind sharing?
Well, I guess the meeting between Powell and Biden, I think it was Monday or Tuesday. I think they announced it on Monday and they met on Tuesday. And I think Yellen was there, and it doesn't even matter what they talked about. Just the fact that Biden invited Powell to the White House is that they have a worry. They're concerned, and I would say it's the inflation situation and the economy as well. We saw GDP. I think it came out. Was it last week? The second revision. The first revision, sorry, for first quarter, that's minus 1.5. Right. We're seeing also inflation or prices rising in Europe. Right. We're seeing also bond yields starting to rise here in the UK and other countries in Europe. I think by September, October, I think the situation in the economy will have changed a lot.
Yeah.
And and we also saw Yellen saying she had, no one could have known that inflation was going to be so high. Well, that's normal for her because she doesn't really know what inflation is because she's a Keynesian.
Yeah, she's given some forecasts before as to how there'll never be any type of events in her lifetime, and all the other things.
I remember as well when they started tapering, when she was chairman of the Fed or chairwoman.
Yeah,
she said, "Oh, it's going to be like watching paint dry," and they had to stop the tapering and then start QE again in 2019.
Right. So the paint is dried, it's cracked, and it's peeling, and it's falling off the dang house because the house is burning down. But let's just kick off and talk about the ADP numbers, man. So you brought that to my attention, and so clearly, I tend to follow the stuff after it's given out just because it's the true indication as to what's happening in Main Street. Despite what we're being told, the numbers don't lie unless they're fudged. But these here, I don't think they're fudging these, but. Give me your assessment on these ADP employment numbers being the worst since the shutdown 2 years ago. What happened to the recovery?
Yeah, it's fizzling out because unfortunately the U.S. economy, the U.K. economy, they're all based on credit and government stimulus, central bank credit, and that's been withdrawn, because they want to try to slow the inflation. That's why I think they're going to have to reverse unless they want to see a total collapse. And the thing about these numbers is that it's a precursor to tomorrow's non-farm payroll. And if you scroll down.
Let me go back 1 second. All right, go ahead.
Scroll down. There's another interesting one there. This one there, yeah. This is the small businesses.
Right.
That's dropping quite a bit now. It's like... Right. Coming off massively. It's almost like it was during the lockdowns. And small businesses are important to the economy, to a healthy economy. I mean, in Germany, they call it the Mittelstand, like the small mom and pop business. It was the backbone of the German economy. This is showing that only big corporations can survive in this environment, in my opinion. So it's not good. And you sent me something about, was it the St. Louis or Atlanta Fed?
Yeah. Let me before we get to that, let me because as I look at these numbers here, I want to go back to that first one. And one thing that stood out to me just about the current trend is if you look from 2020, all these spikes here were signaled the stimulus response. And so we had the big CARES Act, I think was somewhere around this time frame. And then there was another little, type of payout.
Yeah, sorry to
No,
interrupt. The other
go ahead.
reason it went up as well is because they locked down the economy for a couple of months, and then people lost their jobs, and then they went back to their jobs, and that's why it looks so good as well.
So it's just interesting how it's the seesaw action to where now at this current point, like, barring some type of intervention or slowing down of their current policy, this red here will only continue to grow just because there can be no growth. There can be no genuine growth in this system anymore because it's ran its course. Like it's done being able to self-stimulate or self-start because it's been injected so many times that technically speaking, I believe that this is a signal to me that the economy is already truly flatlined, and we're just waiting on the results of this, quote unquote, dead patient, which you mentioned September, October, is very timely because that plays right into the political season here. What will the political figures do? If the economy is already cratering heading into fall when we're supposed to be midterm election type stuff. It's just nothing but chaos possibly this fall. Unfactored in other issues I got here we're going to talk about. But
yeah, there might be another cover for the Fed to stimulate again in the Congress as well, to stimulate fiscally, something like a cyber pandemic or the monkey virus becoming or like a war, China invading Taiwan, or it could just happen that things get really bad in the markets. And they need to, reverse everything.
Yeah, and that's the thing. Like, how come it is becoming more than acceptable for a lot of the mainstream economists, alternative media economists, to basically, like the Fed typically, that gives forward guidance and preparing the markets for whatever they're going to do ahead of time. So here on alternative media side, we're talking about the Fed, dialing back. There are people throwing out different time frames, September, October. And people are literally like, okay, that is high probability because of the situations with the employment and all the manufacturing numbers and all that other stuff is just tanking. It just seems too obvious to me, Mario. Like, is something up, man?
Because you and I, we dig under the surface and we don't just watch CNBC or Bloomberg, or the BBC, who spout out like propaganda. And who say, oh, the economy is doing great, unemployment is the lowest since the 60s, but they don't tell you that the labor participation is really low, and that a lot of people have given up looking for work. So the unemployment number doesn't mean anything, and and we dig under the surface and we keep track of these things. So there you go.
Yeah, so here's that visual aid we're talking about. Just basically showing more of how the economy is not it's hanging on by a thread, man. Like when they adjust these numbers and they're still trending damn near downward rather. That just goes to show how how could there ever be a recovery and genuine growth in any of this stuff when it's all been debt and credit based. So
and another. Sorry to interrupt. Another signal that the economy is not doing well, but people think it is the trade deficit, which has been running at over 100 billion a month, which is huge. The U.S. trade deficit takes away from GDP because the GDP equation adds exports minus imports. And what's that a sign of? Well, it's a sign that Americans are spending too much and not producing enough. And I also listened to someone recently that Americans have put a lot on their credit card lately, so they don't have really enough to get by. And don't forget, all the prices are rising as well. And you sent me something about people expecting food prices to rise quite a bit this summer, right?
Yeah. So let me get to that article here. Let me see here. We're skipping around. Let me find that one. But I thought that was interesting because based upon the report there, it was a farmer speaking, saying that basically, come September, October, Americans have no clue as to what's coming because they're going to have to double up prices. And let me see. I don't know what my article is, but let me see if I can find it. I'm all out of order here. But anyway, for those that are tuned in, definitely, if you're enjoying the back and forth, hit that thumbs up button.
Yeah, here as well in the UK. I
Here we go.
follow sometimes a guy on YouTube. He's a
Mhm.
farmer,
Yeah.
Harry's Farm. You might want to look at it. It's quite good YouTube channel.
Mhm.
He said that yields for crops are going to be a lot lower, or they're going to have to charge more because the fertilizers are more expensive as well.
And speaking of which, I'll just thumb through this real quick here. So here's our article that you mentioned about looming price hikes, for food set to hit Americans this fall. And I just highlighted something here that, he mentioned about beyond the, gas concerns and things of that nature. He says that another round of price hikes is making its way through the food supply chain and it's expected to reach consumers this fall. Quote, people don't realize that fixing it, what's fixing to hit them. Texas farmer Lynn Bugsy Allen says they think it's tough right now. You'll give it until October. Food prices are going to double. So, as a farmer on the ground, it's, experiencing it firsthand. So he's, food prices doubling. That just plays into more of the chaos. Like, how do you have a successful midterm election when, it's complete pandemonium? So, I mean, something has to come or something got to give. It's unfortunate, but and that's why I think it's important for people to really take advantage of this time we have now, especially before the summer kicks in, to make whatever preparations or last minute adjustments to your dependence on the system as best you can, and for whatever that means.
You were wondering earlier. You said, how come people don't see this? Well, it's like in 2020 when they did the massive stimulus, we could tell we're going to have rising prices or inflation.
Yeah,
it's the same thing now. We can see the economy is keeling over because we look at we dig under the surface.
Yeah, we try to do our best to give you the real deal. So let's talk about. So share with me, your thoughts on. Because we were speaking beforehand about how some of the banksters now are becoming more outspoken. They're telling the truth now. Are they having a change of heart, or they realize that they have nothing to lose because it's already game over, and they're protected because of everything they've done? But I want to get your thoughts on J.P. Morgan.
Economic hurricane. Jamie Dimon, he said the weather right now is really nice. It's sunny, but on the horizon we've got a hurricane. Coming. Is it going to be like Katrina, or is it going to be a mild one? Just the fact that he's talking about it, I think it will be a really bad one.
Right. And speaking of which, let me go ahead and just play this real
hurricane. Quick. Right now it's kind of sunny. Things are doing fine. Everyone thinks the Fed can handle this. That hurricane is right out there down the road coming our way. We just don't know if it's a minor one or Superstorm Sandy or Sandy or Andrew or something like that. And it's you better brace yourself.
So we got a hurricane coming, and the first thought came to mind is, what category would it be? So like, I don't know what the weather speaking. I don't know what
5 is pretty bad, isn't it?
I don't know the categories of my hurricanes because we don't get them here in Michigan. But I'm thinking, like, if we got one of the key bankers that's a part of this transition talking about a hurricane coming, whatever in the natural world hurricane categories are, double that. I'm saying, like, that's what he's talking about. In my opinion,
the highest is a category 5.
Highest is a 5.
Winds of higher than 156 miles an hour. So that's a 5.
So I just because this is all encompassing for the entire globe, let's just make this a category 10, like the type of event, which means when the wind blows through, ain't no telling what's going to be left standing. But then we know for whatever they're going to try to reboot us into, those who have gold and silver, because it doesn't blow in the wind as easily as paper, as well as digits, as well as the flickering of computer screens when you go to check something to see what your balance is.
And it's interesting that no one right now really cares much about gold or silver. So they're going to regret not getting a little bit,
right?
Especially if we're going to get a hurricane, like Jamie Dimon says.
Right.
And I'm sure Jamie Dimon's got some gold, some gold and silver.
And you know what? To add to that, because I did a little rant talking about that same thing, but I went to the archives and pulled up something that I talked about. Let me grab it real quick. But it showed at the time how prepared they were for what they were considered as coming. Let me see if I can find it real quick. Okay, here we go. So here is an article that I pulled up from last year that I thought was very timely. Oops, give me 1 second. Add the stream.
I wonder who he was speaking to there, Mike.
What event? That's a good point. I don't know what event because it definitely was an audience. Let me add the stream real quick. So it's Bloomberg Strategies Decisions Conference. So strategic decisions conference. So
you see, we are looking at that and other people, but the average Joe out there, he probably hasn't even heard of this comment because they don't follow Bloomberg, do they? So
right, strategic. What was that strategic? What conference?
Bloomberg conference. Yeah, strategic Bloomberg conference.
So let me see. So because that's one thing. From the mainstream media, they were going to definitely use that as a main headline piece, but they don't tell them what else he said in there. Because I'm sure with that same narrative, he gave the audience, who are probably paid, investors / big wigs, he gave them the inside scoop and advice on what to do. But let me look up and see if that's a conference that was. Let me see. Bernie's strategic conference 7 days ago. So here, I don't know if this is the same conference, but this is what came up here. But it is for executives. So we probably had an audience full of CEOs and things like that.
Yeah, I mean, if it was 7 days ago, it's quite, it's not recent.
Yeah, so here, this is just what I came up with strategic decisions conference. So it's good to say that was a group of A-list / execs, and they probably were just. This was before at Davos. Yeah, this was right after Davos. They came back and they went to this conference to get the briefing. But what I want to talk about was this article here from last summer. Around the same time frame, Jamie Dimon says JP Morgan is hoarding cash because very good chance inflation is here to stay. And I'm thinking, in the midst of all this chaos, when the wind blows through, hurricane takes out everything, they're sitting with nice little reserves because they're going to come in and purchase and further expand their grasp on humanity by buying up all the real estate and everything else that's been blown away. They're going to try to be the rebuilders of everything, but just furthering their control over the system. So I thought this was interesting because this was a year ago, and here we are now. The storm that he's referring to, as far as inflation and what the Fed is doing, plays a major part in that. So,
well, he's the biggest shareholder in the Fed, probably JP Morgan.
No doubt.
New York Fed,
no doubt. So, he was referring to this event here. With the Fed, I say it's the ultimate trifecta of what they're trying to do. And so my question to you, Mario, how far will they get? Because last 2017, they only got, I think, maybe one. They probably took off $1 trillion or $2 trillion, but then they backtracked.
I'll send you a chart. I mean, it's quite easy to see. And they started unwinding 2018. They were at 4.4 trillion, and they got down to 3.7 trillion in September 2019, and then they had to start on doing it again. I'll send you the link.
Okay.
So they were able to do 700 billion back then.
700 billion.
Yeah, but that's from only 4 trillion. Now they've got almost 10 trillion.
Right.
And I think they might be able to do, I don't know how much they're going to be able to do, because it seems like everything is unraveling already now. Bond yields are going up already. People are front running this action. They're selling the bonds before the Fed does. And also you're seeing the NASDAQ down over 20% this year.
Yeah.
And
this is great.
You see, they tried in 2018.
Yeah.
And then it didn't, and then they had to reverse everything, and then they had to do even more. So when they reverse here, when they turn around again, I was listening to David Brady. He was on Palisades Gold Radio.
Yeah,
we recommend that interview. He said that when they reverse now, they could do another 10 trillion because in 2020 they did 6 trillion. So yeah,
so you mean to tell me? So I prior to I have two far right and a far left viewpoint on how they might respond, given the fact things seem to be too predictable for me, and that's a problem. That's why I'm open to all ideas and suggestions. Yeah. But I remember hearing Jerome Powell speak during one of his 60-minute conferences, 60-minute the briefings, and he mentioned it when he's asked a question about the Fed's balance sheet. Is it a problem? And is it sustainable? Whatever. He's like, no, it's minor. Like we haven't really even, that whatever trillion it was at the time, we haven't really even, fully used our capacity. Like, we can go a lot higher because I'm thinking like, I'm like, it was already 6-7 trillion at that point. I'm like, so I'm like, so the fact that you mentioned that they can add another 10, I'm like, that sounds like it's possible. But then again, do that liquidity actually leak out into the system? You know what I'm saying? It's created.
It will. Yeah, it will, because what that means when they do that is they're going to lower treasury yields, because they're going to be buying treasuries. They're going to be buying mortgage bonds. So their mortgage rates are going to go down, and they're going to have a bit more money because they're going to be desperate. And also
the Fed funds rate.
Also, the stock market. The stock market is already down quite a bit now. It has recovered, but September, October is usually a bad season for the stock market. So, and the thing is, I remember Ron Paul asked Bernanke when they started QE after the 2008 crisis, and I think at the time the balance sheet was at $1 trillion, and they're going to add another $1 trillion. And Bernanke said, "Oh, it's not a problem. We can get back to $1 trillion very easily." And here we are now, almost at 10 trillion. So that anything's possible with that balance sheet.
Yeah. Now, also factor in the Fed funds rate, because it's already beneath 1. So I'm assuming if you go up to 10 or add another 10, that means they're also going to take the Fed funds rate negative, or how will that not go?
Well,
real terms.
Yeah, I think that the Fed funds right now is around 1, isn't it? 3/4 to 1.
3/4 damn near, yeah.
But I think they'll want to try to get it to almost 2, so they'll hike another 1, and then when things really turn south, they will add QE and then cut that again back to 0, the Fed funds. I think that's why they're raising rates going into a recession, because they're going to have to be able to also cut rates. But I'm not sure they'll be able to go into negative, because as a reserve currency, you do that. I mean, it would be mega bullish for gold and silver.
Right. But once again, we're at a point where, what we're experiencing has never happened in history before, to where a central controlled entity is trying to pull off a 3-prong approach towards whatever. Like, I don't know if it's called saving the economy, revitalizing the economy, rebuilding the economy. I don't know what they're trying to do, because there's no light at the end of this tunnel as far as keeping the same amount in place.
Yeah, they're trying to keep a Ponzi scheme going, a debt-based system going, because the economy itself is like, it's not a balanced economy anymore.
Right. And it's going to be a lot of collateral damage done to those who are caught in the crossfires of this weaponization of fiat currencies, because, the end result is everything priced in a Federal Reserve note. And that's why I did a rant the other day talking about, how when this next calamity comes through, it's going to reprice every single thing we've known that utilizes the acronym or the symbols USD. Because housing stocks, anything that's been considered an asset, will be repriced. But then again, will it be repricing for the positive with metals? Because how can the COMEX manipulation, all that other stuff, still remain when the world, people who actually still have, they're racing for safety at that point? Like,
I think COMEX, let's say the Fed pivots and starts doing QE again later on this year. I think COMEX will be, they'll be helpless to keep the price down. And I think people will really want just physical gold and silver, and COMEX is not a physical exchange. So we could see, we're already seeing now that people are paying a lot more for silver coins. They're paying $10 premium. It's going to be completely detached, I think, from the paper price.
Right. And speaking of which, I tend not to follow the manipulation trail like a lot of other people do. And so I'm noticing that, let me see, just real quick, I typed in Comex on the Twitter just to see what's trending. Of course, Arcadia Economics is doing a good job of talking about some things. And he's saying that, 7.5 million ounces of silver leaves the COMEX in 2 days. So a lot of people pay attention to the balance sheet, what's happening, what's coming.
I have followed that a little bit as well.
Mm-hmm.
Like I just try to focus on telling people that they need the physical,
right?
Because spending your energy looking at COMEX,
Mm-hmm.
yeah, it's all right, so you can see what's going on. But the most important thing is to buy physical, no ETFs,
right?
Even the Sprott ETF, because when push comes to shove, are you going to be able to call a Sprott and say, "Can I have my silver?" when
Right.
everyone wants silver? And I heard a precious metals dealer on a YouTube channel.
Mm-hmm.
I think he's out from California, and he said if the price starts moving $5-10 a day in silver, we're going to put our phones down because we won't want to deal because it's too risky for
Right.
our P&L.
Right. And that's the thing, like, and that goes to the repricing. Like, you won't be able to determine a fair price to exchange goods and services at that moment because we don't know what the real price of anything is already, other than what they've allowed to, artificially be priced up in the form of, housing, stocks, and everything that's extremely overpriced. So yeah, the day of reckoning, will be one like no other, because how will you know the price of anything? Where will you get your price mechanisms from will be the question.
Wow, yeah, that's what happens in a currency collapse or hyperinflation. You will just have to work out with who you're doing business with.
Yeah.
How much will you take for my silver, for your how much silver you want for your car that you want to sell. People will work it out. The free market price is always the right one.
All right, here's a super chat from Ryan. Appreciate you, man. It says, in all honesty, how could the system retool the sound money? Retool the sound money. It says, which government branch handles Treasury Department buy the gold and issue the new currency? What would a central bank forced exit really look like? Man, okay, that's 4 different. 1, 2, 3, 4. Okay.
I think for the U.S., I mean, you have all the tools of sound money. It's in the Constitution. The Coinage Act. It tells you what a dollar is in silver and gold, and then the Treasury doesn't have to do anything. The Treasury is there just to pay the bills and collect taxes.
Right.
And the mint is there. You can take your gold jewelry, or if you mine for gold, you take your gold to the Treasury, and they mint those into U.S. coins. I mean, that's how you don't have to retool anything. You've got everything in place. Maybe you might need to build a few more mints around the country, but I don't see it as a problem.
Yeah, I don't see it as a problem either. But yet, as far as we are aware of the importance of gold and silver in the possession of people, because it's the people's money, and it's especially silver. But then again, for the system that they're trying to transition us to, retooling the system for sound money is not a part of their plan.
No,
so you have some people on the left say, the white hats, they got the SAR quantum financial system and go back. Okay, yeah, good luck with that. But in the world we're living in now, they're trying to transition us to a digital only CBDC traceable. So, you're gonna have to retool yourself, is basically what it boils down to. You're gonna have to, do for yourself, because I don't foresee our government's trying to, help us out.
And I'll add to Ryan Morosi's question. If things get really unravel and we get total chaos economically and monetarily, people are not going to trust the Treasury or their paper.
Right.
So I think it's going to be very messy. But that's why you have to have a few of the old constitutional, what they call junk silver coins, and some gold as well. And I do the same thing here in the UK. I have old UK coins because it's you can't have a system collapse and then the Treasury comes out with the Fed and say, oh, we're going to issue a new currency. Do you think people are really going to trust that? It's going to take a while for that to kick in.
Right. And so out of all our government agencies, the United States Mint is the last entity that is actually executing its original design as far as what it's created to do, which was to coin our money and distribute it. And so the Treasury itself has abdicated responsibility to the central banks, or Federal Reserve rather, to handle our financial situations with, its mandates and things like that. So as of right now, the United States Mint, as long as the mints are still stamping coins and they still distributing them, that's the closest thing we have to our own actual money in and of itself. But then again, I'd imagine if stuff hits the fan the way that, a lot of people expect it to do, the United States Mint's gonna have an excuse to shut down and not, no longer disperse gold and silver. So literally the silver eagle, gold eagles, everything that's American Mint, legal tender coins will probably be, on another level as far as the legality of it, as well as, it still is acceptable for, tendering to somebody. So, generic silver will be treated differently, but at the end of the day, the composition of gold and silver in anything will be beyond, it won't be a price for it. You won't be able to just have a price for it, in my opinion. So, but anyway,
or you have a ratio of, let's say, someone will sell you, a gallon of milk for a silver quarter or something. People will work it out. I think
definitely. Miles says there will be no stock market or paper markets. They will remove the ladder up. Collapse pensions, hedge funds, and force a liquidity crunch. That sounds like what they're doing now, the liquidity crunch. And so on to the liquidity crunch side of things, the more I hear about how foreign nations are starving for dollars because their debts are denominated in dollars and they're not able to service their debts now as interest rates rise, and their currencies exchange rates to the dollar is declining rather to where they're suffering. So it's like, the world still needs dollars to pay their bills. But then again,
I think it's not even a matter of they have debts in dollars, but it's just that they still need to buy oil and other commodities in dollars, so they need to access dollars. And if the commodity prices go up, they need more dollars as well. But maybe they're going to start dealing in rubles, or and they could buy the oil a lot cheaper from Russia. And maybe we could look into the news about OPEC now, because I wanted to
definitely
on that.
Let's acknowledge this super chat here from Ryan. It says, so could a simple act of Congress undo the central bank? My response is nothing that we're dealing with now is going to be simple. Like, because to me personally, all our Congress men and women are compromised to where I don't see them wanting to even bring that solution to the table, because that'll be the end of their legacy, their career.
Well, the central bank, the Federal Reserve, was created by Congress. The Federal Reserve Act, so it would have to be abolished by Congress. It's doable, but you need the political will,
right? Because they'll think about that as of right now. Who's the pretender and thief that's in charge of our country? You know what I'm saying? To me, and just me speaking honest, he's bought and paid for by the same people taking us towards a great reset agenda, and that incorporates and uses CBDCs and all the stuff that comes with that. So to remove the power out of the Federal Reserve, and they're trying to issue in the Fed coin now, is like, okay, sure. Okay, but, I would like to be hopeful and say that that's a possibility. So, yes, anything is possible, but it's not a part of the plans, foreseeing some, God-foreseen event.
Well, let's hope their plans don't work.
Right, and that's the biggest thing. So we were talking about, what were we talking about?
OPEC.
OPEC. Okay, let me grab that one real quick. Let me see where it's at. OPEC. I think I got too many articles open. But share your thoughts on that as
I think they came out. I think it was it today, or I think it was yesterday. They're going to increase production because the Americans asked them to increase production. So the Saudis, under the Saudi leadership, they're going to produce 650,000 more barrels a day. And actually, the market was already expecting 400,000, so they've just added 250. But I had to look at these numbers here. I sent it to you there, the list of oil consumption.
Yeah, let me grab that. Go ahead, keep talking. Man.
So if you add America consumes 20 million barrels a day, and the EU and China consume about I think 30 or So you add those up, 50 million barrels a day. So they're going to increase the production by 250,000 barrels. for 2 months. I don't think it's going to make much difference. And I think, if anything, it's going to probably, create more demand, more consumption, more inflation. Because they're going to cut the price. People are going to spend more. But you see here, the cartel said it would increase output by 650,000 barrels a day in both months. This is just for 2 months,
right?
Up from planned increases of 400,000. So this isn't really partly new news, but they've only added 250 to already what the market thought. I think they brought this out to try to slow the market down. What I'm trying to say, I expect crude oil prices to go right back up.
Yeah, and on top of what appears to be possible good news, and the fact that they might consider pumping more. Sure, okay, sure, but then again, over here in the U.S., we've already tapped into our strategic petroleum reserves to the point where the hell that oil go? I've seen people shared articles with me showing tankers leaving the U.S. taking our energy to Europe to help compensate for what they're doing. At the same time, EU's allowing the West to basically cripple their economy with energy, and then you factor in, in fact, Russia cutting
and
off.
the other thing as well, I think Biden's done 2 of these strategic reserve releases. The last one was quite big,
right?
And what he's going to have to do now, because under the law or the rules of International Energy Agency, he's going to have to buy those back. So he's probably going to be buying this extra Saudi crude as well for the strategic reserves. So I think it's a gimmick. It's not going to help.
Yeah.
And it's tiny compared to what the U.S. Consumes 20 million a day. Yeah, they're going to increase by 250,000. It's not going to make much difference.
Yeah, and thinking about that, as you just mentioned, the possibility of higher energy costs. So, once again, where are those funds going to come from? So there's going to be some type of announcement. We need emergency, expenditures, because they're sending 440 billion, all these billions to Ukraine. But then again, they're not concerned with tightening down our own ship if that was important to them, which we all know it's not. But it's just amazing how, you can just let the energy flow out of our country. And like I said before, when I first heard that, my concern was that we're going to get to the point come this fall or next year where we're in a dire crunch need for energy and our reserves going to be tapped out. Like they're deliberately draining us now, disguised as helping the world energy overcome this Russian situation. But they're literally using the Russia-Ukraine conflict and the possible China-Taiwan conflict as the ultimate cover-up that allow them to drain as much of the remaining purchasing power out of the dollar, as well as, send all that slush money to the bankers and to people's pockets. And literally that means the politicians know we're at the end game of this system as well. So they try and get as much as they can out of the system, unfortunately. But keep it moving. So let's get to some more thoughts. So feel free to throw out some thoughts, ideas, suggestions, questions, whatever, and we'll jump on them as best we can. Murray says, have enough fuel to get you where you want to go. You won't be going further. Yeah, keep your gas tank filled up as often as you can, because one day the line might be too long, or power might be off. You can't pump none, or there might not be none.
Low blood pressure has a question. The only way you will own nothing and be happy. Hyperinflation thought. Well, the hyperinflation will definitely hurt everyone that's highly dependent on the paper dollar, on the national currency.
Yeah.
Not just in the US, but everywhere else. And that's why you need to keep your weight up, in physical. That's the only thing that's going to save you. And it's going to be, it's already starting, I think, the hyperinflation. They're just like, it's just a little different than in Germany in the 1920s. What we're seeing, I think, that are symptoms of hyperinflation is like the shortages and the supply chain disruptions. That's how I see it.
And so, in reference to the hyperinflation, what makes, of course, Weimar is the greatest example of what has transpired and how it played out. But then you factor in technology and the use of all these, the stable coin illusions, CBDC stuff, and all that other stuff that's going to also be put out there in a large amounts, because they're not going to be actually sending, paper currency. You ain't gonna be able to go pick up paper currency, because if they end up, going zero or negative or whatever, the bank's gonna, remove cash from your hand, because people will automatically assume that's the best way of protecting themselves with cash, but that's gonna be a threat to them, so they're gonna remove that at some point. And then they're gonna come out with the digital representation of cash and all that other stuff. So there's gonna be multiple ways of getting funds into the system.
But the thing is that it all sounds really good, but you're giving all these funds that you're creating digitally out of thin air. It's still not going to solve anything. It's all going to implode. And I think that's why hard assets are going to be the place to be.
Right.
And I think it's a big head fake, getting people into cryptos, digital currency, especially CBDCs and stable coins. I mean, stable coins are, I think, a Ponzi scheme. We saw with the Luna coin and Tether. I even saw that the Bank of England said now that they could come out and bail out stable coins. So they must know as well that there's a problem.
Yeah. And so I think definitely stable coins, give the fiat currency digital representations an extended lifeline, because it gives the regulators a chance to come in and regulate things. And I did a rant last night talking about HR 4741, which is a proposed bill that was put out there, giving the Treasury the ability to regulate stable coins directly by picking winners and losers as to which coins they're going to use. And of course, it's going to be the bankers' versions. We all know that. But it's like, to me, it goes to show how much of the system is rigged, and the ultimate method of helping people giving people the false sense of hope happens to be through the digital transition. And
here's my stable coin.
Yeah. Real weight in your hand is the most stable it can get, because from an atomic structure standpoint, the chemical composition has never been changed.
This is actually a half sovereign, which is about 0.11 of an ounce. So it's quite small. It's a nice size. It's worth about probably just over $200. So, a lot of purchasing power in the little coin.
Right. 200 pieces of paper in the palm of your hand for now.
People say it's chunky and it's difficult to carry, but it's not.
Yeah. Ryan, appreciate you, man. Here it says, so if the Federal Reserve Act was repealed, what would happen to the current debt? Will the shareholders of the Federal Reserve have claim to the collateral? With these reserves being created out of thin air, can the U.S. just say it's void?
Well, the debt is owed by the Treasury, not the Federal Reserve. I guess the Federal Reserve, they have a claim to the gold at Fort Knox.
Those certificates belong to the Federal Reserve.
But the Federal Reserve has those certificates because the Federal Reserve, they got that gold, they stole that gold from the people in 1933. The gold confiscation was done through the Federal Reserve. So that, it's not really the Federal Reserve that owns that. Those certificates are actually, I would say, the American people's certificates.
Right. So they're supposed to be the American people's certificate, but yet those claims on that gold, and that's one thing, like, so from Jim Ricker's book, The Case for Gold, I was reading it and I got to that part where he was talking about certificates and how, the even though the physical gold has changed hands, it was given back to the Treasury and to the government and stored in Fort Knox, yada yada yada. But then again, in order for the Fed to have turned that gold over, they were allowed to keep the receipts on their balance sheet as an asset. So
I know,
because the bankers run the world, it's like I'm sure they.
Or the other thing that could happen if they repeal the Federal Reserve Act, the Federal Reserve holds about 5.7 trillion of U.S. Treasuries. They could just write that off. That would mean, that would wipe out, almost 6 trillion of the national debt. That would be a good thing.
Yeah.
Because,
So to go even further, so if the Federal Reserve So it would I don't repealing the Federal Reserve Act would be great. I don't see that happening, but it is great. But if it was a situation where the East tried to challenge the West towards some world supremacy in the monetary system, and the U.S. somehow, some way wanted to push back and remain at the helm of the system, then they can come out and come to some agreement to reprice gold, because the West sets the price for gold. They did in 71 and 74 in the transition from 33 from 20 to 35, and then from 35 to 42.20, whatever it is today. So it ain't been corrected in the last 40, 50 years. So from $42.50, whatever it is on the statutory rate on their balance sheet, to what it is now, the measly 1800, you add 2 zeros to that. That'd be 18,000, whatever it is. You put some zeros behind that gold price, we can then sit at the table and have a much different discussion as to what the true nominal price in dollar terms is, to where the East might not be so in a rush to.
Yeah. I think Rafi Farber said the other day that if you count all the dollar bills out there, not just in the US, worldwide, and you divide it by the gold reserves, it should be $35,000 per ounce.
That's a low ball figure. That's a low ball figure.
At 100%, though. Yeah, I mean, in the end of the day, I think what people need to look at is gold and how much it buys. They should stop worrying about the paper dollar and how much it's worth in dollars.
Right.
It's like wanting to know how much gold is worth in Zimbabwe dollars. Why would you want to know that?
Right, it's irrelevant. And I did a little video there talking about how for people who are able to look past the mental conditioning that we've been under, where we look at digits and numbers on screens as true measurements of value, if you're able to look beyond that and give yourself a new standard, the standard should be weight. The amount of weight and purity should help you understand, from a metal standpoint. But then other weights such as acreage, land, like if you were to use land as something to settle a trade or whatever, you're going to talk about acreage. And then central banks talk about tonnage. And so, small people talk about ounces, you know what I'm saying? But, so using a different measurement of weight is probably the best standard.
And we should stop naming the money like dollars or pound, euros. Just have money the same, do like a gram, that's the problem. They fooled people into thinking that the dollar is just a number on the screen, but like the currency that we use today is just a substitute for gold and silver, like Rafi Farber says. That's a good point he makes. And all prices today are derived from they come back from the purchasing power of gold and silver.
Right.
So people shouldn't really worry too much about how many dollars gold is going to go to.
Right. Here's S400 wants to put a question out to you. Says, Mike, ask Mario what he thinks of gold price from the U.S. debt clock, saying that it's currently around 21,000 an ounce.
I personally don't look at that. I don't really know where they get that price.
Yeah.
And it's irrelevant because you can't get 21,000 an ounce right now. So I only look at really the debt there. I don't.
Yeah. Yeah, I just for laughing giggles, I refer to it just mentioning how, if according to their figures, if every single unit of currency was held accountable, then we would get a number like that. But even today, let me see, even looking at the graph today, the number is not what it typically is. So looking way over to the far right, dollar to silver ratio now 2,300, dollar to gold ratio now 1,700. So
17,000, I think.
17,000. I'm sorry, 17,000. So yeah,
I don't know how they get that number. I'm not sure.
So it says here, and I hover over. It says up top. It says the year-over-year increase in the U.S. M2 money supply divided by the yearly world production of gold ounces.
Oh, I see.
According to whoever the metrics are. So M2 divided by, I'm assuming the World Gold Council. I don't know who the.
Oh, I see. Is that like over some years?
Year over year increase.
Yeah. All right.
That's the metric. That's the way they use that. So for whatever it's worth. But we all know that it's well beneath what it is right now. And so if you're privileged enough to be able to take, probably $2,000 and go, 2,000 pieces of paper and go get an ounce of gold, do you justice now, because it's good to say 10 years from now, you won't be able to get it for 2,000 Federal Reserve notes if they're still around like that.
Yeah, I mean, I remember, when I started buying gold, it was $300 an ounce. And thinking of where it is now, people, maybe I should have bought more.
Right. I'm sure we all can say we wish we would have bought more, because I remember when I first had my awakening moment to silver, it was down to like $15 an ounce. And I'm like, I got time, so I dollar cost average. But I'm like, man, we can go back now. I sell everything, including the kids.
Like you're like a Michael Saylor, mortgage your kids.
Oh, man. All right, man. With the 50-minute mark, man, we could go forever, but it has to come to an end. All good things must come to an end. So as always, I appreciate everybody for blessing us with your presence. Manico64 on YouTube. If you're new, of course, you got to know who he is. And then, of course, Rethinking a Dollar, wherever you can find us. Mario, lead us with some parting words of wisdom, if you don't mind, man.
Wisdom.
Put you on the spot as always.
Yeah, I don't know. I mean, I guess. I think the next 12 to 18 months, people should be more worried about conserving the wealth that they've been able, if they're lucky enough to have some saved, than thinking about like multiplying it, because I think things are going to get really crazy. So yeah, don't worry too much. Like this year, for example, gold isn't doing great, but it's still up on the year while the stock market is down. So think of wealth preservation more than multiplying your wealth, I would say.
Man, that's a good one. That's a good one. So I was thinking about that yesterday, how to put that into a video, preservation over profit. Like, don't be so concerned with chasing the latest, dagger and all that other crap.
I think it was you interviewed him, Dr. Schoon.
Yeah.
He said I think it's the time of the vultures, isn't it?
Yeah,
it's not the times of the bull or bear. And I think we're entering that. He's been calling for that for years, but I think we're near to that time of the vulture.
And Mario, what I will make a recommendation if you want, man, to get Daryl on and for our live talk, and you can throw some questions out. I can throw some questions out. We interview them together. I think that'd be fun, man. So let me know if you're interested in doing that. So I think it'd be a good time. But all right, people. As always, it's been good to connect. Have a happy Thursday and a blessed Friday and a happy weekend as well. Be blessed, be safe. Back at it next week. As always, more than enough stuff to talk about. And as always, enjoy your weekend and, just spend time with the family and be grateful for what you have, because at any minute it can be gone. So enjoy it while you have it. Be blessed. Peace.